I'm Oliver Sloup with Blue Line Futures, come to you from the Chicago Board of Trade with another episode of Tech Talk. And we saw another risk-off day in the grain markets, corn specifically, really kind of extending those losses after yesterday's failure to maintain strength and get out above those recent highs with any sort of conviction. And a lot of people are kind of sitting out there scratching their heads wondering, well, didn't we just get a bullish USDA report? Well, yeah, we did, but a bullish report doesn't mean that we get a bullish reaction. And as mentioned in some of our other morning reports and our previous Tech Talks, I think some of this was priced into the market from some market participants. We put out a note on October 16th that said that the market was trading more like a 1.8 billion bushel carryout, not the 2.16 that the USDA gave us. This week we saw 1.7. So it was a bullish report, and that gave funds a reason to start reducing their net long position, which is considerably large. And I also want to remind you, listen, we're all old enough to remember these contract lows down here. Remember this? This was August 12th. And this was a USDA report, a bearish USDA report. We bottomed on a bearish report, and we referred to that as a fundamental rejection. And that's what we're seeing here. And that doesn't mean that a top is in the market, but it certainly is a caution flag if you're optimistic going forward. The funds are obviously in a mode right now where they are liquidating that exposure to the long side. And another reason for that could be potentially option expiration next week. December is a serial month, a lot of open interest, a lot of volume there, and $4 is psychologically significant. Also an area where I think it would be max pain for a lot of those options to expire worthless on the put and the call side. So that could be a magnet going into option expiration next Friday. Now, as far as the technicals go, there is some support here at 405. This is a little bit of a trend line from those lows that we just talked about. Previous resistance back here in December and January, and the breakout point most recently in October. So $4 to 405 is going to be pretty significant support, and I do think that holds. I think we continue to work a little bit lower towards $4, but I don't think that we're going to drop and roll too far out of bed below $4 just going into option expiration next week. I think that does offer a little bit of support to the market. So that's what we're looking at for corn. Moving over to the wheat market, this is something we've kind of been working on the sell side for a while. We talked about a bearish head and shoulders potentially forming back here at the beginning of the month. We got this big move higher on November 5th where we got that huge rally that spooked us a little bit, but it ultimately failed at the close, and we still got the head and shoulder formation coming into play. Shoulder here, the head, the shoulder, breaking down below trendline support, really opening the door for some accelerated selling pressure to take us down in this 575, 580 pocket, which was previous resistance going back here to February and March and September, and then the eventual breakout point in October. So that continues to be our near-term target. Break and close below there, and as you can see, there's some air under the market to take us a little closer towards 540, but one day at a time. 580, 575 is the next objective for us. Now, as far as the livestock markets go, a little quiet. We've got a little bit of trend line resistance here, which might be holding the market up, but we still think we can get back to these highs that we saw in August, closer to that 114 level. We've been pretty optimistic and upbeat on the cash market, saying that that's probably going to firm up to 110, potentially 112 here in the next week or so, and I think it could be sooner than that. We saw 110 pass on in the south, 111 were bids down in Texas, and we could get that firmed up to 112. The thing that has me a little bit nervous here this afternoon is the fact that the outside markets are under a little bit of panic with new lockdown suggestions coming from the mayor of Chicago and potentially other cities. That doesn't mean that it's going to halt the rally higher, but a little bit of a caution flag. If the outside markets do roll over overnight, that could bleed into a risk-off open for live cattle. Nonetheless, we still think the fundamentals and technicals support higher prices. We would be ready, willing, and able to buy a pullback down here to this gap close to 109. We've also gotten a lot of questions with regards to feeder cattle. Feeder cattle, same type of deal. We're pretty optimistic that we can get back at these September highs a little closer to 142, 142 and a half, but we've had a heck of a run. The RSI is towards the top end of the range, so if you've been long the market, you might want to start paring that back or potentially selling some covered calls against long positions, because there is a gap here, and honestly a pullback would probably be welcomed from both sides of the market, buyers and sellers. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. If you have any questions, give me a call, shoot me an email, Oliver@Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors. Thanks a lot.